Hello everyone, this is the trading team at Trade Oxygen here. Welcome to another post-market analysis. This is for the Friday, the 4th of October 2024. This is for micro mini NASDAQ index futures. So let's see how the market went. And if any of the terms we mentioned here are not clear, or if it's new to you, don't worry. Subscribe to the channel and click the bell icon. We will release simple videos soon explaining each of these terms and concepts. So don't worry about that. What we want to do now in this video is to feel how we analyze the markets and to understand that you can trade with proper logic. Okay, so looking at the economic calendar, we can see during the day we had high impact news and they were positive for the USD, which means they are slightly negative for the stock market. Okay, let's see what's next. So looking at the daily chart, we can see that, okay, if I put this over here, we can see that there are some wicks seen here. And you can see in this price leg, this was a retracement in the daily chart. And in that, you can see this candle formed a swing low because there's this candle is the high is above this, and this one, the low is above this, and the low of this candle is above this. So it formed a swing low as well. And also you can see there's a 15-minute fair value gap seen here. So the chances are, because of this swing low and the wicks here, and there's a imbalance to fill, so the chance is during the day there was a chance for the price to be bullish. Now you can see this is a post-market analysis. That means this is after the market. So you can see during the day finished bullish. So the price supported what I'm explaining here now, which means there is a logic behind these markets if you analyze them carefully. So then the daily bias is bullish. So we are mainly looking for taking bullish entries. If that means to buy. If we are to sell, that means if we are take a short entry, it will be a counter trend. So we'll be taking quick trades if it's short trades, counter trend. Okay, so in the 4-hour chart, there was nothing much in the day. Like, however, we noticed that there's an imbalance, 15-minute imbalance. So there, as said in the daily chart, there was a chance for the price to go and fill the imbalance. So that's nothing much. There was nothing much in the 4-hour chart. Let's see the next chart. So looking at the 1-hour chart, what we noticed was we noticed that there was again the same 15-minute fair value gap and order block. So because of that, in looking at the 1-hour chart, where there was a chance when the market started for the price to go up, like what happened actually, and then fill the imbalance. So that is the reason why the price went up during the day was the reasons what we are explaining right now. That's how we, the trading team at Trade Oxygen, analyze the markets. Okay, and this is not licensed investment advice. This is for education purposes only, and we are giving our view of how we analyze the markets based on ICT trading concepts. So then when the market started, we were looking for we were checking if there will be any buy entries, bullish entries. So for that, let's go to the 15-minute chart. Okay, so this is the 15-minute chart, as you can see here. Now, when we look at this at 8:30, this is the 8:30. What happened was the price made a huge push up. So this is because the high impact news released at 8:30 on this day. So normally the trading team at Trade Oxygen, we don't place any trade entry at 8:30. We wait till 9:30 a.m. New York Stock Exchange market open. But at 8:30 we are analyzing the market. So we noticed that this huge price push up. Now, with what I said earlier, we were expecting to take a bullish entry. During the day, we were expecting to take a buy entry targeting this fair value gap and order block. That's what I mentioned a few minutes ago. But what happened was at 8:30, even before we start the trading at 9:30, the price reached our target, meaning we were waiting this to happen. Okay, ideally, if this happened at 9:30, we would have taken a buy entry. But because this happened before 9:30, we are not taking any trade before 9:30. So, however, we noticed that our analysis was correct where the price moved up. Okay, so what does that mean? Does that mean we don't take any trade? Well, not exactly. What that means is now we need to react and react to what the market is telling to us, react to the price action. So what we did was we waited till 9:30 a.m. open, right? So then to summarize what happened in the 15-minute chart, what happened was 8:30 a.m. news price went up and it rebalanced this fair value gap, right? And then it also reached this order block. If you're not clear of these terms, we will release videos, so please subscribe to the channel until we release them very soon. Okay. Then the next thing what happened was after the price reached this order block, we noticed that the price started to make some wicks. So what that means is in the bigger picture, this is that price leg down which made that order block and the fair value gap. So now we can see the price came all the way up and now we can see the price is making some wicks. What does that mean for us? Okay, right. So around 9:30, what this meant for us was, okay, we now when we look at the 8:30 a.m. news, it was good for the US dollar. The news was positive for the US dollar. That means it's slightly negative for the stocks. So what happened was the price was pushed up, but the news was negative for the stocks. So because of that, because if the news is negative for the stocks, the price should go down, right? However, instead of the price going down, the price went up. So what that means is, when we analyze the markets, what that means is, this could be possibly a false move up. It's a possible false move up to trap traders and also to rebalance the imbalance and to reach the order block. So if in that sense, for us we looked at as a false move. So the false move is a Judas swing, part of the Judas swing of the day, because this is the midnight New York opening price over here. So now the price is above that. And if this is a false move and if the price is above the New York midnight open and 8:30 a.m. opening price at this moment over here, if the price is above that, and if this is a false move, right? If this is a false move, and then in this price leg, if we consider due to news, this price leg, if you look at that, so at this moment at 9:30, the price is at a premium. Premium means now it's a high price. So what the markets does is the markets move from, let's say, from a discount to a premium, and if it's at a premium, it again there's a chance of it moving to a discount. And if this is a false move, which means there's a chance where the price can come down because it's at a premium. So as I said, then the chance is there's a chance of price coming to a discount because that's how the price moves. It's like a magnet. So the magnet, what I mean by magnet is when the price was here, it reached like a magnet towards the fair value gap and the order block because it needs to imbalance it. But after it reached that, then it's not it here it was at a discount price, but now in this price leg, it's at a premium price. What that means is now the price has a chance of going down. So as you can see, when we analyze the markets at the trading team at Trade Oxygen, when we analyze the markets, we are using a sound logic. If you are not clear of this, we will educate you in the new videos, giving simple videos for each and every concept. So stay tuned until that. So with that understanding, at 9:30, we saw the wicks being formed. So then we went to low level charts to see if there's a chance of getting a sell entry, because it's at a premium and we are now expecting it's a false move, which means we are expecting the price to come back and rebalance. Because when I say rebalance, what I mean is there's imbalance now here. There's a fair value gap. So there's a chance where price can come down and rebalance it. If that is the case, if that is the scenario, then we are looking at a counter trend trade. What I say by counter trend trade is, in the daily chart a few minutes ago I said the bias was bullish. So we were expecting to take buy entries, but the price did not give us that opportunity to take a buy entry because it left us by the time 9:30. It's already there. So now we are looking if there's a sell entry, but it's counter trend. So if we take a sell entry, it will be a very quick sell entry, a quick trade. So then we went to 5 minutes to see if there was a chance of getting a trade. We have to go to 5 minutes to see if there's a chance. So at around closer to 9:30, when we had a look at just before 9:30 a.m. open, when we go to the 5 minutes chart, this is the 5 minutes chart, we can't see a clear price action. So when I say a clear price action, if we are to take a quick sell entry, we are looking for some signatures in the price. Like when I say signatures, we are looking for displacement, we are looking if any swing low is broken down, we are looking if there's any order block being filled, we are looking if any fair value gap being filled. Likewise, there's a sound logic behind the trades we take. We have that checklist. So the trading team at Trade Oxygen, we follow that checklist before we take a trade. Now, do we see that checklist here? No. In that case, what we do was we go into a low level chart, right? So then we go into, let's say, a 4 minute chart to see if there is any signature in the price, okay, for what we are looking for. And when we look at the 4 minute chart at that time, again, we did not see a clear price action for what we are looking, but we can see there is some price action happening here, but that information is not enough. So in that case, we went to 1 minute chart. Okay, so when we came into 1 minute chart, we noticed a clear price action in the 1 minute chart, where these are the wicks we saw earlier in the 15 and 5 minutes. Then we saw there's a swing low here, and in the 1 minute chart we noticed just before 9:30 the price broke this swing low. So it is an internal market structure shift down. So if we are to take a sell entry, we need that internal market structure shift happening down, which is now good for a sell entry, but that's not enough. Then we can see it happen with some continuous down candles, and with some sort of a displacement, right? Not a huge displacement, but still it's significant. Okay, and then also in that displacement, in the push down, we notice that there's a small fair value gap it created. So we are looking for these signatures, and not only that, in the price down it made an order block. So this is a 1 minute order block and a 1 minute fair value gap. Again, I am telling you, if you are not clear of these terms, don't worry, subscribe to the channel, click the bell icon. We will explain, we'll release simple videos explaining what is order block, what's a fair value gap in the very near future. Okay, so when we notice the order block being made and a fair value gap being made, and this internal market structure shift down and the price going down, so that is a signature for us for a possible sell entry. And now when the price retraced back after that, after coming down, when it retraced back, that's another important point we see here. We can see the price retraced and rebalanced that smaller fair value gap here and went and respected the order block and made a wick. So when the price respect the order block and make a wick, and after that when the price significantly moves down, breaking this swing low, when the price significantly moved down, that is another significant aspect for us. Okay, so when the price break this swing low, that's another internal market structure shift that we see. Now, did we take the trade entry yet? Not yet, because still this is where this 930 starts, just in this candle. But now we can see when the 930 New York Stock Exchange market opens, we can see this swing, a huge displacement down, making another internal market structure shift down. So this is positive for us at 930 to see this huge displacement down. Not only that, then we noticed in this huge displacement down, in the previous leg, this green color candle respected the order block, right? And now with this displacement, it is respecting this fair value gap imbalance. So when that happens, this swing high is strong, and we consider it according. So we look at it as an intermediate term high. So we expect this intermediate term high to be strong and respected. What that means is when the price goes down, we are next, if there's a retracement coming up, right after this, we are expecting the price not to go above this swing high. So we are expecting, let me show it to you. We are expecting in a retracement, I'm showing little by little in the chart so you understand. So we are expecting in the chart, we are expecting, okay, if after 930 when a retracement happens, we are expecting the price, this retracement, to respect this this intermediate term high due to the reasons what we explained. Now as you can see, that is what happened, right? So you can see that this price leg up respected this intermediate term high. So once we see that part, what we did was, the trading team at Trade Oxygen, we placed a sell limit order here and waited till the price come to that, because we were expecting the price to respect the intermediate term high. So we put our stop loss above that intermediate term high, and we were waiting for the price to come and grab our entry, and that is what happened. The price came and grabbed our entry. So that was our first trade for the day. So we were, as a take profit target, we were targeting the 15-minute price imbalances. This is the 1-minute chart, but we were targeting 15-minute price imbalances and the price to retrace down in that 15-minute price leg. Okay, let me show that to you as well. So we are again in the 15-minute chart. So this is that price swing up. So we were expecting the price to come and rebalance these imbalances. So we were targeting, when we took the entry here, sell entry, we were targeting the price to go down, which is what happened. So that was our first entry, and we had, if some of our traders, if they missed this, we had 2 more entries taken. However, if the first entry was taken, that was sufficient for some of our traders. But some of our traders who missed this entry, who waited for more, who was looking for more price action, there were 2 more trades here. I will be not explaining them in detail now. However, we'll release more videos in future explaining this kind of trades as well. However, there was a sound logic behind this as well, where we took these 2 trades based. So with this, what you understand is trading can be done with a proper understanding and a proper logic. So those trading entries were profitable trade entries for the trading team at Trade Oxygen. So if any of these terms we mentioned is not clear to you or new, if you are new, don't worry. Subscribe to the channel, click the bell icon. We release simple videos explaining each and every of these terms. So that's the end of this video. So we will see you soon in another pre-live or post-market analysis in the next few hours. But it's the Friday, so we'll see you all again on Monday. Until that, stay safe. Take care.